I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and to look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market gained some ground last week despite more turmoil in the UK and continued upside move in US interest rates. That combination kept bids coming in the dollar, which is a big focus for traders right now. There were good early week gains as there appeared to be a stabilization in the UK, especially in the gilts and in that bond market. But things got worse again as UK inflation came out greater than 10% annual rate. And the UK said they were resuming their bond sales. That's quantitative tightening. And their treasury had to bail out the Bank of England. How do you like that? For £11.7 billion. That's losses from their holdings from QE. And then Prime Minister Truss resigned in 44 days, and that's historic. All that kept the dollar moving up and interest rates moving up here in the US. And Wednesday through Thursday, foiled rally attempts really were the image that we saw all those days as the market tried to get up and then moved down again, as 10-year yields rose and got up as high as 4.3%, and that's pretty stiff competition for stocks. So why am I focused so much on the UK? Well, the UK is kind of a canary in the coal mine. People, they don't really realize that all of this stuff going on in the UK that is rattling all of the markets and investors, well, that's about big government. That's about what they've been doing for these last couple decades. And as the government grew larger and larger, of course, a larger percentage of the GDP, then it makes their bond market more at risk as they have to produce more bonds to pay for all that. How about that they last year were about 41% of spending, their spending was 41% of the GDP. That's an immense amount, and that puts their government, their bond markets, everything in a ton of trouble. But why is that important? Well, the US was up around 40%. So you can see it's not much difference as these countries are truly social democracies. So that is why there is so much risk, and that's something that was important for me to say as the US, once the dollar gets past this period of being bid so heavily and people start looking at how the US has similar risks, well, the dollar will decline, and that's going to be the source of a lot of problems here in the US. The realities are that the market really, with their reactions to everything we saw in earnings this last few days, were really minimal. And the focus was really on those other factors. Yet, individual stocks had some big moves. Tesla, for one, on earnings fell 6%. But some of those old blue chips, when's the last time you heard the term blue chips, did really well, with telephone rising 7% and IBM 4% on earnings. Those old kind of stodgy stocks, well, those are the ones that seems to be getting some interest right now. Maybe that is a flight to safety. Friday, Twitter, it moved down. It was down a lot, but then came back mostly, as the government said they're going to review all of the Musk deals regarding security issues. Snapchat, well, that really hurt the market early on, and the market was weak early on Friday as they fell big on very weak ad sales. Snapchat was an $83 stock in all of this stay-at-home craziness that we were seeing, and it falls to $8. That's a 90% decline in that stock, and that is got to be something that investors really must be wincing from and wondering, well, where can they invest these days? That really hurt Meta and Google because they are ad-based. But then the stocks did better, came back some, as there was some chatter around that here on Friday that the Fed was talking about slowing their increases in rate hikes, where they in December might actually only raise rates by 50 basis points instead of 75. So that put a bid into the market today, and the stock market was down early, but then as the dollar began to retreat, stocks did better. It's been a volatile day with the stock S&P's down over 20 points pre-market and then rallying to up 50 and then pulling back again to very near unchanged. But now here we are at midday and the S&Ps are up 37 points. So it's a positive tone today in a market that really was pulling back from some big gains. So the question is, where's the market now? What do we expect? Well, we've been very negative on the stock market for this year. All along, we've been saying that our work showed that Q4 could be a period for some rebound. The very hard selling that we saw stocks do up to a week ago was really a capitulation, in our opinion. And then there was a huge reversal on October 13th, and that came on time for our projected intermediate bottom that we were looking for. Two tweets that I saw last week I think are really important, and they illustrate the negative excesses in sentiment in the market that we have had up till this point. I think it's important to share those with you because they have some good information on here that I think we need to take into account for the near term at least. So the first tweet we're going to look at here is from Jason Geppert, which was here on Twitter, where I'm always posting stuff on there. And this was very interesting. And he makes a point that looking at total premium spent on puts versus calls, that it was historic levels. For the first time in history, calls were the amount of money spent on puts were 3 times that of calls, a record. And you can see here as we look at this chart on the bottom that this is extremely significant. You can see in here past times when the market fell very hard here, 208, 209, it got nowhere near there. Here where you had the mini bear in 2016, well, same level as it got over here. And look at this. So there was extreme excesses in negativity when you look at the action in the put buying versus the call buying. So this is kind of a shorter term reading when you look at put call ratios. The next one we want to look at though is really a longer term reading, and this was a tweet that was put out by at Faro TV. It came from Bank of America Global Research, and this is fund manager cash levels. And they're at 2001 levels. This is a ton of cash that they have right in here right now. And you can see in here at some of these important points where the market was selling off and they were raising cash. Here's in 2008, 2012, 2016, 2020, and now 2022. And you could see the cash levels are really high right now for fund managers. And what that means, of course, is that if the market starts to go up, they start to feel like, well, they're on the wrong side of the market, and they start to put money back into the market. So this might be a little more of an intermediate term reading, but you can see in there, as we look at those two slides, looking at both the fund manager cash levels and the put call ratio, that the likelihood of getting to a market that has some bids in it is pretty high right now. And this is what we're looking for here in the fourth quarter. So I think the important thing, and I just jumped forward on the slides there, is that right now, well, the market's been pulling back here as it had a pretty big move up from that low on 1013. This looks to us like a testing period, and I'll show you that later on in the show, why I think upside action it will return if it hasn't returned already by early next week. And I think the bids are going to be back in the market. I'm going to continue to throw caution as I give you these more positive comments. This is all in the context of a big bad bear market. However, this period coming up from the mid-October all the way through maybe sometime in December is a period that is more favorable on the intermediate term, and we can see some continued upward attempts, bounces in the market that make some minimal amount of ground. And I'll show you where those levels are as we get in towards the end of the show. Stock market for the week, depending on what index you're looking at, it's like up 1.5 to 3.5%. Russell's the weakest, Dow is the strongest, and the Dow is the strongest as you saw stocks like IBM and UNH and Goldman Sachs be a big help to the Dow. Bonds crushed, 30 years down about 4.75 points. The 10-year yield's up 27 basis points, now at about 4.27%, giving a high for the week of 4.33. And that, of course, is pushing up mortgage rates to 7%, and that is putting huge pressure on home builders. Gold market down about $8 on the week. It's testing that low, and we think it is trying to make an important bottom here, while silver was up about 50 cents on the week. The dollar down 0.3%. Boy, it didn't feel like it. It felt like it was moving up all the time as the stock market was moving down on each of those upticks in bonds, as it was pulling traders around by the nostrils each time the dollar went up. Well, you saw downticks in the futures and the inverse. Oil down about $1.20. In our opinion, on the longer term, it still looks like it's going to head back to 75, test those lows, and possibly by January, and this is the first time you heard this from me, there's a possible test of $62 coming in the oil market sometime in January. Nobody is really figuring that. So that is the opening for the show, and I hope that you found that extremely interesting as we looked at the put-call ratio and the fund manager cash levels, which are all looking for potential bids coming in the market right now. At least that's what they indicate. Coming up in this show, Ari is going to give you a preview of a member video of Future Speak. He'll look at multiple time frame analysis in the heating oil market, and there's an opportunity there, we believe, on the long side. Katie is going to look at our cycle low timing tracker and show you multiple time frame analysis on United Airlines with alongside opportunity there. And don't miss our level 2 special. I know you want to scroll forward a lot, but I'm going to show you this. This is a special non-recurring membership, and you're going to get a ton of information, huge content support for traders and investors, and you only have to pay once and you can see a huge amount for a month. I'm going to give you an idea of what's in our video library a little bit later in the show. And I'm going to show you the stock market short-term view, looking at the S&P 500, and show you our chart streams, that's our proprietary indicators, that are live running right now and all of the time when the market's open. You're going to find that extremely interesting. Please go to askSlim.com and explore, subscribe, share what we have there, follow us. If you're new to askSlim, please sign up for the level 2 special that we have there. You click the learn more button, that green one that's flashing. On YouTube, subscribe to the channel, click on notification bell, and do give this video a thumbs up. That helps us. And on Twitter, follow us at askSlim. Questions on all of these huge offerings that we have, any questions on our website or anything that we show you, write to Matt at askSlim.com. This is a preview of a member video on heating oil. Ari is going to show you a clip from Future Speak where he shows a potential positive setup coming in HO, heating oil. And if you want to see our full video, 24 futures and indexes, looking at intermediate and long-term charts, analysis of 48 charts in about an hour, Avi does a fantastic job. Do become a level 2 member, or 3 or 4, and you'll be able to see this video and our entire video library. Avi, show them what you got.
So what you'll see right away, just looking at this chart, is that heating oil is clearly much stronger than both unleaded gas as well as crude, as this is really rallying quite nicely. If we focus on this dotted blue cycle right here, a very nice rally off of the lows, and there are really two tracks that are in play. There's this green track, which would say there are good odds of a move to that 78.6, or it could end up forming its high around now. Now, what I want to really focus on is this daily chart for the levels. Now, what do we see here? We see a very swamped cycle here forming in the context of a positive ribbon. This is a nice uptrend in place on the daily time frame. So what we would look for is for this rising ribbon to likely be where this would hold up, and then look for this to turn right back to the upside, and very good odds that it would get through that old 78.6, which if I bring that over right here, you'll see that's right at that 410 area. So that's why it's very key to look at that daily time frame for the levels. We have looked at that 78.6, and overall good odds that it moves through that 78.6 in this next short-term rising phase here. So a bullish pattern in heating oil and a clear positive bias as we are looking at it. That next daily low is due 1020 to 11.2. Levels on the downside are all rising, but they come in from around 371 to 346. Based on this overall look here, we really don't want to see it through the 61.8 fib here, and we will very likely be looking at a long side trade idea in heating oil based on everything we are looking at right now.
Great job on that, Arby. That really is clear, and I hope the members love that. This is a peek at our cycle low timing tracker. Katie is the lead on this and does a fantastic job as she looks at our focus list of stocks, ETFs, and futures, and then does all of the cycle analysis and keeps this thing going. It's just amazing. And she'll show you what that looks like as she brings you analysis on United Airlines and a potential bullish setup just ahead. Take it over, Katie. Show them.
Hi, this is Katie with askSlim. On your screen is today's Cycle Low Timing Tracker. It's a tool that we've developed for our members that helps identify opportunities both going into and coming out of cycle bottoms on both the intermediate and short-term time frames. Because of the principle of commonality in cycle analysis, we sometimes see several symbols from a sector appearing on here together, and we're seeing that today with both of the airline stocks from our focus list. The two that we follow are Southwest Airlines and United Airlines. Both of them are in their weekly cycle timing windows, and that is why they are appearing in this box and in this column on the cycle low timing tracker. They have also both exhibited enough positive price action to trigger the bottom pending algorithm for the weekly time frame, and therefore both Southwest and United are also found in this box and this column on the cycle low timing tracker. Now notice the colored squares that are found next to all of these symbols. Those squares are pulled from another askSlim tool called the Slimulator Ranking System. The colors of the squares are a quick visual indication of a combination of cycle phasing and momentum conditions in each symbol. The first square for the intermediate time frame and the second square for the short-term time frame. So let's compare Southwest and United. Southwest has yellow squares for both the intermediate and short-term time frames. United has both squares green. That means the conditions in United at the present time are more positive compared to Southwest. So let's go take a look at the chart of United and see what type of opportunity may be setting up. This is a 5-year weekly chart of United. On the bottom, we have cycle brackets that are 32 bars in length. Those cycle brackets are then divided into minor half cycles. The cycle brackets are a drawing tool, but the actual cycles are outlined in black up around the candlesticks. These purple spikes show where the actual cycle lows occurred relative to the ideal cycle brackets. And these blue vertical dashed lines show the weekly cycle timing window. That's a period of time of a few weeks around this ideal cycle low when we would expect United to form its current cycle low and then begin to move up into the rising phase of the new cycle. Currently, we are in the last week of that weekly cycle timing window and moving up. Another feature of our weekly charts is our proprietary reversal scout. It's this green and purple ribbon, and it's a momentum indicator. One of the things that we use it for is to help us confirm a new rising phase. So we have just got an upturn in momentum with the reversal scout turning green. Now, the previous cycle was a left-hand translation, meaning that the cycle peaked near the beginning of the cycle. That's a generally bearish occurrence. It also ended up being essentially a flat cycle, ending at approximately the same level at which it began. The combination of these factors leads us to believe that United won't be able to make a higher high in this new cycle, and you can see that we have our initial projection only to the top of the resistance zone. That's around $45. If it is able to get through there, our 78.6% fib is at about 48.5. Let's take a look now at the daily chart. Notice that we're approximately halfway through our daily cycle. We have tagged the prior cycle high here. We keep backing off from that level. Notice the upper wicks on these two candles. Now, we do have positive momentum. Both the reversal scout and the slim ribbon are green. The slim ribbon is another proprietary momentum indicator which colors the candles red, gray, or green depending on momentum conditions. Considering where we are in the cycle, we're expecting a peak to form at or near this level, and then a move down into this daily cycle timing window that runs between November 1st and November 10th. So this is looking like a possible long side setup, but we do need to wait. What we want to see is for United to pull back into this daily cycle timing window and to hold this support zone that currently runs from about $37 on the top to about $35 on the bottom. Now, if United does make a higher high in this current cycle, then that support zone will also rise. So once we get into this zone, we'll watch to see if this support zone here can hold. And then as we begin to move into the rising phase of this next cycle, our members will see United begin to move through the bottoming process on the cycle low timing tracker. Our slim ribbon PO is another indicator that can give us a momentum continuation signal to the upside, and or we will see momentum shift positive on our lower time frame charts. So that will be our signal for a possible long side entry, initially targeting the $42.5 to $45 area. Now, if the support zone does not hold, then we'll be waiting to see how United behaves in this next cycle. If you'd like to learn more about the tools and services that we offer in each of our membership levels, please visit our website at askSlim.com.
Great work on that, Katie. Thank you. All right, I'm going to show you the stock market looking at the S&P 500. But first, don't scroll forward. See this amazing deal I'm going to show you right now, perfect for our new members or upgrades from our free members or our level 1 members, because this is a great offering for level 2. This is our level 2 trial, a 50% discount. That's $29.50 for a month, non-recurring. So you sign up. If you don't like it, you don't have to do anything because it's just going to expire. And then you'll get a good look at things. And if you want to stick around, well, then you could subscribe and we'll offer you a very special deal. Included in this are our level 2 stock index report live stream. Looking at the S&P 500, NASDAQ, and the Russell. You're also going to get our daily snapshot. This is a report that Matt does an unbelievable job on, looking at all of the indexes, and that comes out daily. Every single day you get that. You're going to get chart streams, which I'm going to show you in a little while when I look at the S&P 500, multiple time frame analysis with all of our proprietary studies. You'll get our weekly ETF review, the Slimulator Momentum Tracker for position traders and investors, programmed with our algorithms in there, The Future Speak show, that's just an amazing 1 hour show that Arby does. You get our whole video library, and I'm going to give you a peek at that in a second, with over 600 videos in there in 10 categories, and our new trader workbench for trade planning and Discord to access. There is way too much to show you here, but what I'm going to do is I'm going to take you to our site right now and give you a peek as to some things that are in the video library, because the video library alone would be worth thousands of dollars for you to invest in if you wanted to get this type of training. Not $29.50. Pretty amazing. So let me show you that, and you get an idea as we look at the video library. And you can see that right here as we're looking at, well, you get Market Week Archive and Future Speak. You'll get our askSlim live and special reports. You'll get the new videos as you transition from chart analysis to trade planning, and new trade planning with options that Katie does, stock sectors, style strategy and plan, tools for text, trader psychology, which is just amazing, where I take you through so many things that are about personal obstacles to success, and all the big picture analysis that we do. There's so much in here, plus guided visualizations that I lead you through to work through some of the emotional issues that may be hampering you. I want to look at tools for text really quickly so you can get an idea of what is in here. So as you can see in here, the first one that's coming up is Cycle Analysis Basics, where you can watch a video where I teach you the very basics on cycle analysis, identifying trade opportunities using cycle analysis and chart patterns, using candlesticks to identify highs and lows. These are both produced by RV, and daily chart setups for swing term and swing trading, for short-term swing trading. The question is, do you add to positions when they're going well or not to add? Well, that's one that I show you that's great. But let's look here. What's in the top 10 right there of different videos that people watch in here? This is tools for text, day trading setups, tools for text. My favorite study pairs, understanding the slim ribbon and the projection oscillator. This is directional bias for swing trade and option trading using multiple time frame analysis, improving swing trade entries set up for intraday swing traders using an 8-minute momentum chart, improving your directional decisions for scalpers using moving average ribbons and the SAR. And this is index comparisons, choosing which one is the best to trade. In other words, I show you how to understand the different momentum conditions that will be telling you our relative strength conditions. Short-term help with directional decisions as you use our favorite studies and apply them. Chart setups for scalpers and help with changing volatility, improving your entries, and this is using swing high, swing low analysis. Unbelievable. Look at this. There are over 80 different videos just in this tools for text section, and just amazing things that you can learn by using that. So I wanted to show you that because I think it's really important, because didn't want to go there yet, because in this special there is just so much for you for just $29.50, and I think this is a great opportunity for you to learn so much. How about over 600 videos that you'll learn from for $29.50? Come on, how can you not spend that money? You have any questions, write to Matt at askSlim.com, or go to the top of the askSlim page and click Learn More. That button up there, the green button, and it gives you an illustration of everything you're going to get there for $29.50. Just amazing. All right, this is the stock market analysis. I'm going to show you daily analysis on the S&P 500. Plus, I'm going to open up chart streams, and you'll be able to see the live analysis that we have running, so that we can look at our indicators and get an idea as to what the conditions are of the market right now. So we're just going to look at the S&P 500 on a daily chart, and then we'll take that a little bit further as we look at the chart stream. So this is SPY. Looking at that, I actually want to look at SPX. So let's change this over to SPX, where we have that analysis on here, and there you go. So this is really interesting because you can see a great illustration here of what cycle analysis looks like, our version of that, and with some of our proprietary indicators on here. And you can see what we're looking at on the bottom are, well, those arches. And I always talk about this first because if you're brand new, you're not going to understand what this is. This is a drawing tool. And what that helps us is to see the energies in the market, where there would be a rising phase and where there would be a peaking phase and a declining phase. The actual cycles are up here, with these blue lines up here are how they resolve themselves, or how they translated from the what would be the ideal that's on the bottom. And you can see also we have the slim ribbon in here, and when that is configured on in a positive way, where the short term is above the intermediate term and above the longer term of the three moving averages in there, then what it does is it turns our slim ribbon PO green. And the up arrows tell you when it's likely to get a resumption in that particular direction. So here you see all those red arrows as the market was moving down, and it was warning you about negative resumptions. You've had the same thing going on right over here, and as the market has turned up, it has not yet been able to turn blue, which would be neutral, though it's very close to doing that right now. So that is a look at the slim ribbon PO on the bottom. Now let's go back to the cycle analysis as to where we are right now. So I'm going to take a little closer look in here and just look at these last few cycles. So you see these vertical blue lines, that shows you where the cycle had bottomed in there. And what we're looking at for people that are new are cyclical harmonics. That's what these harmonic families are. And this has a dominant cycle that is running around 27 days on average, with minor cycles that are 8-9 days that are coming in there. As a matter of fact, you can see pretty clearly an 8-day cycle, a 9-day cycle, a 9-day cycle right there. And now note this first minor cycle. This is forming in a positive way. The slim ribbon is about to neutralize in here, so it's getting close, as the market now here on Friday is on its highs for the day, with the S&P's up 56. So you could see it got down here to this minor 38.2% support and then began to move up. This indicates to us, as we are now about 7 days off of this low, that this, if it were to pull back again in here in these next couple days, these minor supports are really likely to hold, and then it begin moving up again. This is supportive of what we believe is an intermediate low that's formed. We're likely to have the upward movement get up and test this intermediate 50% right there. It's actually a short-term 50% that is up there right around 3,800. The top of this, or the 61.8%, is just over 3,900, which is a very reasonable place for it to move up to over this next time period. So you can see in here that this cycle points to an upward move and then a corrective phase over here. These yellow areas are where the biggest downside risk is. That's where the nesting is, right here and right here. And you can see that the next one that we're going to have where there's a period of risk is somewhere out over here. But it probably will be a market that is fairly strong and not give enough downside to take out this low. Were that to happen, of course, then you would have the next rising phase coming right out over here. And we talked about this upward correction, positive correction in a bear market, likely coming out into December, and this is where that comes from. As long as we hold above this level at 34.9158, then it's really in good shape. We would get a warning if we start getting under 35.95, which doesn't exactly look like it's going to be happening in here. So we have a market that is starting to form a bottom, but it's really not doing everything that we'd like to see yet. To make that bottom, we'd need to see the momentum conditions starting to improve. So what I want to do is I want to go to back to our website. Here's where I was showing you the look at the at the videos that are in level 2, but now where I am here is in our in the hub. Now I'm of course a full member looking at everything, and you can see on here these are requests from our level 4 members for charts on all of these stocks in there. So if you're a level 4 plus member, you can request 2 custom sets of charts per week and get all of our analysis. As you see right here in Valet, somebody had requested that get for that particular analysis, and then that analysis is done by our team and it is sent to them. What I really want to do is go to chart streams right over here, because of course we're looking at the stock market, and for level 3 and 4 members, you get all of these live charts with all of our analysis running on there. For level 2 members, which is included in our special that we're running right now, you get the SIR intraday and you get this S&P 500 multiple time frame analysis. So what I'm doing is hitting that and blowing it up, and now this is live, as you could see right here. I'm just clicking that and going live. And this is us broadcasting right now with our proprietary indicators in there. So, like I said, the market needs to do more work in here. It needs to change some of these negative momentum conditions to positive. This is the weekly, which we don't really show the whole chart of. We just want you to see our reversal scout in there, which is still exhibiting a lot of downward pressure on the market. When that happens, you're likely to run into trouble in the resistances on the daily chart. Again, here is the slim ribbon PO right there, giving those negative signals and not neutralizing yet. So it's still giving signals that are looking somewhat negative. Let me just move this up here a little bit so that you can see on the bottom. Let's see if I can get that a little higher. On the bottom, and here you see these red dots. That is the option bias indicator, which is still giving negative conditions. Now, it's important to understand that we look at shorter term intraday, and that's where we're going to start to see things improve first. And you can see in here the slim ribbon PO now is giving bullish signals, as you see right over there, though the market condition indicator on the bottom is still minus 75. It needs to get over plus 25 to be positive, so that has a long way to go. Still, again, we need to see a lot of work for this market to get positive. So beginning signs of it getting positive right over here, as you can see. And right over here, this is reflective of the SIR live stream looking at the S&P 500. And you can see in here as it moved up easily through these yellow zones. Those are the acceleration zones, and this is the dark red where it got up there and started to stall today, and that is the reason for that is that, let me get this a little closer in here so you can see that right there, sorry. The reason for that is that it's a very heavy resistance area that the market is probably going to struggle in. So at the top of that right over there is 37.24, and if the S&P 500 got through that, it would enter the next acceleration zone. So this is a key level right over there that it got to 30. It's right now 37.15 on the cash index, and this is 37.24. If it gets through there, it gets to the next acceleration zone, and likely to be moving up quite sharply, as you can see. So this is important as we look at the sum of the evidence, and that is on the bottom in here, you see that the option bias indicator is still red and negative. The slim ribbon PO is still red and negative. The askSlim market condition indicator is down here at minus 75 and negative. But the signs are starting to show that there's a bottoming going on. These things have to improve in order to get some decent movement that we're looking for up into December. So if you want to get this live, all you have to do is become a level 2 member. We give the S&P 500 make that available to level 2 members. So if you take our special right now, you will be able to get that. So I wanted to show you that right now because it's so important to this analysis. The market is trying to do what it needs to get to turn more positive, but it's not there yet, and we can see some continued bad back and filling until that starts to happen. So again, here's the S&P 500 on the daily chart, and we're looking for probably a pretty good range right now, somewhere down in this area of 3650 on the bottom side, and then 3800 with a potential for 3900 over here on this short-term analysis on the upside. That kind of is what we're looking for in the range, and that should give some pretty good choppy trading as we're seeing right now for shorter term traders. Overall, we think it is a bottoming process going on in the intermediate term that probably has a decent couple of months ahead where the market tries to do better. All along, that has been our projection from the very beginning of the year, that Q4 would look a little better in a bear market year. So I think that is everything that I'm going to show you there right now. That's the stock market S&P, and looking at our chart streams, which you can get by becoming a level 2 member. This is the level 2 trial. Don't forget to sign up right now. $29.50 non-recurring. You will not be billed again. It'll be up to you to sign up for one of our specials at any of our levels, and you can see everything that's in here, and click that learn more button up on the top of the askSlim.com page, and you'll be able to see everything that we offer in there. That's everything I'm going to show you today. I hope you thought it was a fantastic show. Please do go to askSlim.com and don't miss that level 2 special. On YouTube, subscribe to the channel, click that notification bell, like this video, give it a thumbs up, and watch our member videos in the playlists and past shows, and I think that you will be fascinated. On Twitter, follow us at askSlim. Any questions that you have, write to Matt at askSlim.com. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a stage.